Hey guys, in today's video I'm going to go over one of my other favorite ETFs for passive income in 2022, and that is hdif, ticker symbol HDIF, and it's on the Toronto Stock Exchange. It is actively managed with covered calls. The target yield is 8.5% and distributions are about 7 cents per unit paid out on a monthly basis. This ETF is an all-in-one ETF that also holds 5 other covered call ETFs inside, and it's got a risk rate of medium. So Harvest is one of my favorite portfolio managers. This is the Harvest Diversified Monthly Income ETF, and as stated from the website, the Harvest Diversified Monthly Income ETF is built to deliver the consistent monthly income and diverse growth opportunities that Harvest ETFs are known for. This ETF is an equal weight basket of 5 of the Harvest Equity Income ETFs, a multi-sector portfolio capturing a large and diverse set of high-quality companies. Existing yields are combined with a covered call option to generate income and offset volatility. So some of the benefits of investing in hdif is that it's an all-in-one solution income ETF. You get access to large cap companies diversified across sectors and across the globe. You get exposure to a powerful long-term growth. You get a consistent yield at about 8.5%. You have modest leverage at currently 1.25 to enhance the income. And you get the covered call strategy to enhance the income potential and lower the volatility. Some more information about this ETF is that it is DRIP eligible depending on your broker. The inception date was actually February 4th, so it is relatively new still. And the ex-dividend date for this month is actually March 30th, meaning that if you buy it before March 30th, you will still be eligible to be paid for the next dividend. Going over the holdings, your first ETF is HHL, which is the Harvest Healthcare Leaders Income ETF. This is your healthcare across the globe, and it really is defensive and a staple in this portfolio. And another 25% is the Harvest Equal Weight Global Utilities Income ETF. This is HUTL. This is also one of my favorites. It's very defensive and a blue chip companies across the globe that have to do with utilities. We always need our lights, we always use our phones, so I think this is a great one to have. Next one is HTA, which is Harvest Tech Achievers Growth and Income ETF. With HTA, you get some growth with the tech, and this is also one of my favorites because it is more focused on the growth, so you will see some growth in this ETF as well. This is the technology sector. You get HBF, which is Harvest Brand Leaders Plus Income ETF. This has powerful brands such as Nike, ES Sportcheck, McDonald's, big brand names like that. And then you get HUBL, which is Harvest US Bank Leaders Income ETF, weighting at about 24%. This sector are the US banks. So going over the sub-sector allocation, we can see that this ETF is very well diversified. Information technology makes up 28.3%, healthcare makes up 27.3%, financials make up 27.1%, communication services make up 14%. You'll see utilities at 13.2%, energy at 4.6%, industrials at 2.4%, consumer staples at 2.4%, and other these smaller categories. And then you see cash and other asset liabilities at 24%, and that is that modest leverage that we see in this portfolio. Additionally, you have some cash and other asset liabilities at 24%, and that's because since we do see leverage in this, that's why it's over 100%. That 24% at the end is because of the leverage. So going into the separate ETFs in this portfolio, the first one is HHL, and this one is the healthcare in the US. You get massive companies such as AbbVie, you get AstraZeneca, you get other companies such as Johnson & Johnson, you get Pfizer, and many more blue chip healthcare companies in the US. So the second ETF is HUTL. This is also one of my favorites. This is really defensive as it focuses on utilities on a global perspective. Some of the companies in here are the staples, such as you get Fortis, you get Bell, you get Verizon, you get TELUS, there's TC Energy, PPL Corporation, you get Amera. As for the third ETF, that is HTA. This one focuses on tech achievers and growth income. Inside this one, you get massive companies such as Nvidia, you get Google, you get Visa, there's Apple, Microsoft, you get Facebook, which now goes by Meta, you get Adobe, and many more massive companies. So as for the next one, HBF, these are your major brands in the world. Some companies in here are Disney, you get Visa, Google, you get Shell, McDonald's, Nike, JP Morgan, Johnson & Johnson, Bank of America, Microsoft, and you will see a lot of overlap here, but that's okay actually, because these companies are the big and solid ones that you want to be holding on to, and these are the more safe and massive growing ones. And the last one here is HUPL, which is Harvest US Bank Leaders Income ETF. Now generally I do like the Canadian banks a little bit more, but having exposure to the US banks is not a problem at all. Some of the banks in here, you'll see First Republic Bank, you see Citizen Financial, KeyCorp, M&T, you get Bank of America, JP Morgan, Wells Fargo, Citigroup, and many more US banks. So to sum things up, this is a great ETF for Canadians who are looking for passive income. This ETF is actively managed. It's an all-in-one ETF suitable for passive income investors. Monthly income, there's equal weight of 5 ETFs, multiple sector diversification across the globe. You get large cap companies with powerful growth and a modest leverage at 1.25. And with that guys, thanks for watching. If you liked the video, make sure to like and subscribe for future content. And let me know in the comment section some future video ideas you guys would like to see. And with that guys, stay investing.